Morning, everybody. Hope you guys doing well. Let's quickly go over the daily bias. So, looking at NQ, we've gotten a huge overnight move of around 300 points to the downside, starting off just even before the 8:30 price action. So, overnight move. Typically, when you have a large expansion like this, we're going to expect some consolidation to follow. So for the New York session today, we have 8:30 news tomorrow, so it's not a crazy high impact news like CPI or anything, but we're already kind of hesitant before 8:30. Doesn't mean it's going to be low probability, but then when we have overnight news or overnight move like this, that's quite large. You start stacking those kind of conditions. So we're going to be careful today. I had, if you go to the daily chart, I have the discount and balance here marked out from this current dealing range. So discount and balance. We also have a 4-hour order block that price should reach into here. So the current drawn liquidity for me was 2148.25. Now we are filling this imbalance completely. I told you we could with the 10-hour, the 10 a.m. 4-hour candle. We could retrace slightly back up into here to an open, high, low close. But right now we have bearish SMT at the highs with the 817 high, like I mentioned in the predictions chat. We'll see if we can get any continued move, hopefully with the macro. But obviously not expecting anything today. You can see YM here is pumping up basically above their midnight open, so that's also SMT. Let me mark this out. Obvious SMT there. And then DXY is kind of just moving lower. What's up, Coco? I'm also noticing all this low resistance up here too, right? Like all these relative equal highs. By the way, the 15-minute chart is paired with the 1-minute chart. And the easiest kind of scalps you'll see is from 15-minute IRL to ERL, just meaning basically 15-minute gap to a line. So if you look at the 15-minute chart really quickly, premium imbalance here while we're trending. As soon as you trade up into that and you get a wick, some sort of response out of it, you drop down to your 1-minute chart and you have a pretty clean market maker sell model in there. That's why I was anticipating that 930 would run out 2260. When you have a market maker sell model like this, you'd expect that 930, a point in time, would complete the second stage of distribution. Also the macro technically starting that move there. Hopefully you can see low risk sell, first stage, and then second stage also within this fair value gap here. The price respects during the macro time, and then we sell off into the rest of it. Another thing you can use for tape reading is if you get a reaction, this is not always true, but if you get a reaction out of a fair value gap quickly, you would anticipate that the next little leg in price. So if you're looking at fair value gap like this, if you get a reaction out of the lower portion, you're not going to see consequent encroachment. If you see a candle closure all the way within the gap and it's not reacting at all, you'd expect consequent encroachment or the premium end to be hit. And obviously you can use this for market orders. You're trying to get in at the best point you can. If we're trading into the gap, you want to see as your entry opportunity or trading down into a gap. If we don't see any wicks forming from the first upper portion or lower portion, then expect consequent encroachment to be used as a market order. But ICT has mentioned before that if you're using limit orders, preferably it's going to be on the discount end or premium end. If you're waiting for consequent encroachment, it's best to just use a market order. See if it gets the respect and the rejection off of the gap. Maybe there's an order block there that you can use, and you prefer to use that instead of just trying to market in or limit in on the consequent encroachment, because it's very likely that occasionally, if we're not weak enough or strong enough, they'll just rip all the way through it, hit the limit order, and then go for the stop, which is a lot of times why you see me preferably just go for market orders instead of limit orders. Holding the bearish order block so far. We also this 5-minute gap that I marked out, traded up into their wicked, traded lower. No rush today. We've got Thursday and Friday, which is high probability time-wise, like looking at the economic calendar. So today is going to be, today and Monday were the 2 days that I was a little hesitant on. Monday's price action wasn't the best. Let's see if we can get anything in here. Obviously wicking that high as expected. I want to see it close in that premium gap too, preferably. There's your SMT on these highs. So yeah, I could have used something like this as an entry. There's nothing wrong with that. For me, it's just outside of macro time. But traded up into the fair value gap, SMT breaks market structure here. Right? Fair value gap then in premium of the dealing range. We just missed it. But fair value gap nonetheless. And then 20 points off that scalp. Yeah, that's what I'm looking at, Coco. That 10-hour, 4-hour candle. I'm looking actually for a retracement because this gap, if you look at the 4-hour really quickly, this gap is not a breakaway gap. I mean, technically it's a measuring gap, but anyways, it's a fair value gap. And I want to see at least one up-closing candle body within that range. So the fact that we're dropping aggressively into here, also tapping a daily imbalance, which is this gap, and the 4-hour and the order block wick in here, which is technically a mitigation block. I'd like to see some rejection off and then maybe close back up to consequent encroachment of this bisi. So something like this. And obviously back down for the rest of July. But I'll mind that down right now. First 15 minutes printed. Obviously we got the bearish SMT. Notice the daily SMT. Actually, if you could just look at the 4-hour. But look at these highs up here. And then if you look at ES, there's your daily SMT. So obviously this one being the weaker one, if you want to go 20, 60, 40 day to look back, you can do that. Obviously the weaker one, if you're bearish, will most likely reach the 40, but we'll say the 20 and beyond, and then the stronger one, in this case, will only reach maybe like the 20. If to look back data ranges. So like if we're weaker, we're obviously going to reach further down. And there's your sell side on DXY also. But I mean, yesterday, after the stream was ended, by the way, we did get that new low pierced during lunch hour, which is quite nice. And then obviously with your daily profile, if you get a sell side sweep during lunch, you're most likely going to expect a premium return or an expansion up to close in the PM session. But nice little market maker sell model there off of 15-minute fair value gap too. Morning. Still holding these bearish fair value gaps quite well. Got macro time approaching. Yeah, those session liquidity pools are extremely useful. And your best lunch trades are going to be, if you were to trade lunch, your best trades are going to be targeting AM session high or low. So the time that you're going to have an opportunity to trade during lunch, which is very rarely, is if you have a large expansion move with no real retracement during the AM session, what you'll see is we'll put in a false high at the wrong time, a retracement into discount or premium, and then a continuation past 11 o'clock into lunch to target that new high or new low. So the way you can identify this early on is if we have no like actual deep retracement. Normally what you'll see is something like this, right? Maybe like this, and then you put a new high in at 10:30, or even just one stage would be fine. If you don't see any of these retracement legs, an anticipated deep retracement into this dealing range, and then a continuation into time. So lunch, you would target this high, and normally there's going to be a 15-minute fair value gap into a 15-minute ERL up here. And then you just wait for some sort of confirmation on the 15-minute chart, 1-minute breaker, or a market maker buy model, whatever you want to use. And that's your go-to setup for lunch if you were to trade that. We do have macro time approaching. You can see that we're getting kind of a lack of displacement at the end here. A lot of wicks back and forth. If you switch time frames really quickly, you can see it more clearly. 3-minute, 2-minute, 4-minute, all in there, kind of wicking this bottom part out. 5-minute. So I don't like, although it is macro time, I don't like the idea this is a second stage distribution to the sell side. I would actually like it to reverse a little bit, because I'm still liking all that low resistance buy side, although we did have the SMT. And yeah, like that, like Coco mentioned, the 4-hour 10 a.m. candle. Do you ever care about the PM session? Preferably no. I'm never, I care about it, like obviously when I'm doing my analysis, but I don't trade the PM session ever. Just New York AM session. Only thing I look at. When I started learning ICT, I would be watching it from 9 to 4. Literally. Like the days where I didn't have class, I would open up my charts and then eat food the entire day and just be watching it from 9:30 to 4 p.m. And that, I mean, in the early stages, I think that's you'll always go through that phase just to watch how the PD rates are respected, and you're kind of in awe. But trying to force demo trades or just trying to force your will upon it for that many hours, you lose focus and you get more emotional for sure. So my suggestion to anyone would be, you only need one session for sure. Like you can make as much as you want in one session. And then if you're trading futures, most times it's going to be New York session. Even for something like oil, the New York session is going to be most volatile and provide the most kind of opportunities. Here's your macro. Still lack of displacement to the sell side. But everything's kind of in place for an ATM model short. SMT 5-minute candle about to print bearishly here. But this is a sketchy short in my book because we're already reaching our discounted balance, our higher time from POI. We're wicking out the bottoms on the 4. And there's not really a lot of room to run. So, I mean, I guess we could reach all the way down to here. Let me mark out that 4-hour order block really quickly. Yeah, I guess 60 points isn't bad. You got bullish SMT? Oh yeah, slightly. And we're trading back up for this high. If we take out this high, then I'm definitely going to start watching ES. Whoops. Because normally with SMT, you're only going to see one 15-minute candle create the SMT. That makes sense. Like this kind of wick and then closure back below. That's kind of the turtle soup you'd like to see, right? If we come back and take this out, I'm going to then look for, is there a 30-minute order block in this range? Yeah. Potentially to trade up into here. And then obviously any fair value up above market price would be our target. And look how YM also, we wicked our, what's this? true day open. We wicked it, and then we didn't close in discount, and we're trying to continue back up. So even on YM, like we've for whatever reason, the past 2 weeks, we've been having the best price action in here. But you can see open, manipulation, expansion, continuation into probably lunch. So this is where I would look to be bullish. To be honest, we got the bullish SMT. About to get a 5-minute candle that's closing. We got 945 that closed bullishly, but no fair value gap. 950 candle. I'm liking this to expand. We're gonna see how we use this reclaim for value gap. If we close above here, it's 1 minute CISD, but I'm more concerned with the 935. So let me mark some stuff out, and then I'll send this to prediction share really quickly. So this would be the 1 minute change in state. But notice how there's no fair value gap yet. Actually there is down here. But I wouldn't even like this kind of gap, to be honest. There's too much consolidation in here. I want to see preferably just create a secondary gap and trade into that. Let's see how we get the respect off this. And we're still not printing above the 935 candle. So delete this. I'm more interested in a closure above here on the 5-minute chart, which we still have 3 minutes left in this candle. But notice how we're also holding that wick. There's your there's your wick and closure above the high. You can see YM's also pumping up. I'm actually curious. I want to see what YM looks like. This is some crazy stuff here. This is why it's kind of difficult to use Dow as SMT. It's never reliable. If you're gonna use SMT, just look between ES and NASDAQ, and then if it's not clear there, it's probably low probability. But you could go to DXY and look for inverse correlation SMT. So if one's making a higher high and the other one fails to make a lower low, that's SMT with DXY. 13 points. It is in discount. But this 10 a.m., the time has my attention. Because if we're looking at a 4-hour bullish candle, you see open, low, high, close. Time is this? 9:45. Oh, this is... You're going to see these highs right now, actually. Buy set up here. Secondary displacement. You see NASDAQ to catch up now. It's the weakest one.
Order filled.
$9.09. So we're holding this gap quite well. I'd still want to see a closure above the CISD. Let's see what the other guy's doing. Notice there's no clean order block here either. They're probably just going to be reaching into.
Order filled.
So look for the low. So whenever you see this kind of price action, by the way, there's no bullish order block on the low end. This technically is your breaker. As soon as we don't get a respect immediately, should be a clear sign. But here's your 10 a.m. candle. Purging into the fair value gap. Never got the 5-minute change in state delivery. Now, if we can get any sort of reaction, let me look back at ES. And there's obvious SMT between these guys, right? You just look at the lows. But dipping further down. The ATM model actually was quite nice. Your daily range premium, 954. Unfortunate. I didn't see this as a clear short, to be honest. But look at the time. 954 creating the high. So, I mean, everything was in play. You had 15-minute SMT that wasn't holding. It's 945. Like, you did have the SMT here. And then your 5-minute candle printing bearishly would be the 955 candle. But yeah, actually, there is no short. And I was saying, like, a second stage distribution to the sell side would be a little bit harder because we're just wicking all this bottom. Given the PA, that one seemed a bit more risky than usual. Thought about taking it and declined. Yeah, I agree. I don't think today is, with all the conditions in mind, overnight, large overnight move, and then tomorrow we V30 news. Risking something like this where it's giving kind of conflicting data, I'm completely fine with missing. But look for the 4-hour order block to be traded into. Here. There's your daily imbalance. Yeah, if you can see price both ways, stay away. Exactly. Just like yesterday's daily bias. So yesterday daily bias, we had a pretty one-sided, or today we had one-sided price action, but yesterday it was not the cleanest either way. It's either you have to stay away or you have to have some understanding of price reading on the lower time frames. But I mean, look at the asset like divergence here. YM is skyrocketing. You have DXY basically creating I don't know what kind of flag is this. Bear flag. You had SMT between these highs, and NASDAQ is selling off aggressively. There's your 4-hour. Oh, we didn't get reach it. Almost didn't reach it. Actually, I wouldn't be surprised if Dexter posted a video today on this. right? If you know who he is, Dexter's Lab. He trades the 4-hour power of 3. But this is what I was mentioning. Okay, so if we have a 4-hour 10 a.m. candle that's bullish, so if you go back to the 4-hour chart over here, let me go to NASDAQ. So if we were to see this as a bullish candle, which we're trading to discount, tapped into a 4-hour order block, we have this inefficiency that was not traded into with any buying, any clear up-closing candle. All of that combined would mean that you would potentially see a bullish 10 a.m. candle for the 4 hours. So if you're bullish, you have your open, low, high, close. You have your manipulation leg in here. You have some sort of accumulation, first of all. And then you have manipulation leg. Now what you can do is you can take the manipulation leg. This works with any candle, any time frame. You take your manipulation leg and you go from basically, if you had a breaker, and this is your bullish breaker, right? If you had a breaker, you want to measure this leg here, which is your manipulation leg. And each of these sections that you get as a result create different stages of price delivery. So your 2 to 2.5 is normally where you're going to be targeting this kind of range in here, which is why it's outlined in red. Right there. And then obviously the 4 standard deviations would be like the ultimate target. But each of these ranges, if you watch one of his videos, it'll make more sense. I don't have a good time explaining exactly what it does. But I think there's like a low risk buy entry somewhere in 1 to 1.5. You have a silver bullet within here. Actually, no, wait, low risk entry is here in this range. Silver bullet is within this range. Then you have either a reversal or retracement, deep retracement at 2 to 2.5. And then you have terminus from 3.5 to 4, I believe. If we have a large expansion, this will be terminus. So if you look up Dexter's Lab or APHIS also covers swing grade. It's called swing grading. There's a couple guys who use it in this Discord, in the general chat. I think if you've seen Rob, he uses a couple of swing grading tools and all that kind of stuff. But it's extremely fractal. So once you understand it with a good bias on a higher time frame, and you can literally use it on, if you wanted to, the 1 minute, the 15 second, and the 5 second. You just have 3 time frames. You get a bias. Is it reaching for IRL or ERL? And then you can just go in and start using swing grading, find out where the manipulation leg is, open, high, low, close, power of 3 kind of candle. But the problem is if this is a bullish 10-hour candle, sorry, 4-hour candle, your manipulation leg may last all the way until 11 o'clock. All right, 1, 2, 3, 4. There's your new low taken. Should have just stuck with bias this morning. 9:29 is a wrong time, right? So, what is this at? 9:54. So you'd like to see expansion into 10:30 for ES especially. NASDAQ, I don't know as much. We're just wilting lower. Trying to see what could be reaching for. Is there an inversion for value gap? Nope. Do have this low down here. 10 a.m. low from Tuesday. I know, at least no more all-time high. So at least we have some sell liquidity and buy liquidity we can reach for. Oh yeah, from Friday. But not expected. This kind of price action is not expected today. So if you miss it, don't feel bad. Like when you have a 300 point drop from open with no manipulation above true day open, like this should already be telling you we're going to have a difficult morning session. If you saw some sort of manipulation above true day, so look at this as a daily candle, right? You saw some sort of manipulation above true day open. Maybe we consolidated, swept Asian high. That would have been nice because look at all this low resistance liquidity over here. You have low resistance liquidity. We could have manipulated and then it started to expand lower into London. Then if we go into New York, all you got to look for is either an OTE retracement or just a continuation, the sell side, into 10 o'clock or into 10:30. We had no manipulation above true day open. So you're looking at this as a potential open low high close or even just an open down expand. Like I don't even think, did we even get a wick above true day open besides the first couple candles? Yeah, we literally got like one tick above true day open. So no manipulation, large range before 9:30, about 280 points. Then you have 8:30 news tomorrow, and you have all the indices not agreeing at all until basically 9:55. And if you look at 9:55, we don't have any retracement after. Where's 9:55? We have one kind of wick up into here, but there's no displacement after and no retracement into a fair value gap. So difficult day. I'd be surprised if people had biases and able to capture, move, going off short off here, 954. But I mentioned this when I was on vacation. I dropped a market review. It's probably in models and reviews. Trying to find the video. See all of the bank. We have a up closing candle SMT, but we do have 750. Okay, I think it's this one from June 20th. Within that clear bullish SMT. Maybe not. I don't know. But if you're looking at your macro time, and if you've been journaling like you should be, you'll notice that there's a window within the macro time that produces extremely high quality entries. Most times it's going to be from 9:52 to 9:58. Rarely will you see an entry after 10 o'clock. The only times you may see an entry after 10 o'clock is if you have something like 10 a.m. news. Then you'd wait for after the news to drop anyways. So maybe like, 10 o'clock to 10:15, you can find an entry. But on most days, so 8:30 news days and non-news days, 9:52 to 9:58 is where you're going to find a really, really solid, you can actually specify this, fair value gap entry. Okay, and the sweet spot really between that is, right in the middle, so 9:54-ish to 9:56. So if you go back and look at all your data and you start marking out exactly at what time does the optimal entry on a fair value gap happen during the macro time, you'll see it's within this range a lot of times. So if you see an entry where it's trading up to a fair value gap right at 9:54, like we can go back and look at yesterday's example really quickly. Here's your fair value gap. I think we shorted off of yesterday, right? And the order block. You can see what time this is. Fills the gap right at 9:53-ish, 9:54 is your optimal shorting opportunity. You have another entry at 10 o'clock, but that's a later one you can see, right? If you go back to, was it Tuesday, Monday? So you should be doing this every day. Is the important part of backtesting and when you're taking journal screenshots is mark out the times of, if you don't do this already, mark out the times of reversals, entries, and where targets are met. And this should be the time. Obviously, you're going to be marking out the price of everything too, right? Like you're already marking out SMT, you're already marking out for value gaps. That's what everyone should be doing. The people that are marking this stuff out, times of reversals. So like this is what I'll mark out. Okay, 947. I put a little thingy here, 947. Then I'll mark it an entry. Here's an entry here. You have 952 creating for value gap run, and then 958 creating for value gap run. So I would come in and mark out this time, 958. Right, so there's little windows within the macro time where you can find really, really solid entry opportunities. And it's normally going to be about 2 minutes after the macro start up until 9:58, really around 10 o'clock. You can just, obviously, if you wanted to, you could just use time and price of just, okay, if there's a fair value gap trade, it has to be in line with bias. Obviously, like this is 949, 953. It is trading to premium here, but this is counter bias. Plus, you probably had bullish SMT on these lows, I assume. But that's the important part, right? Is going back and screenshotting and then going back and doing your journal entries like you should be doing. As you see, I've probably lost interest in this. We're trading into a higher time frame fair value up here. If you were to measure the 5-minute manipulation, it's actually quite a large manipulation, so I don't think. Oh, actually, yeah, it is quite large. This makes more sense. But anyways. Funny thing, I actually started looking for this type of detailed time in just a little while before I came here and started seeing some of it. Yeah, it's crazy how accurate sometimes you can get, especially when you start pairing that with the stuff we were talking about yesterday with the power of 3. Like if you have an 8:30 news day, right? Or even a regular day, and you say, okay, I see a manipulation leg. Like this is obviously in a hindsight example, it makes sense. But this is a difficult one because you have a high and low that's both put in that time. But anyways, so you have a really obvious, like beautiful setup where you have a manipulation leg right at 9:30. We start trading up. You have SMT at the lows. Like this would be like your best case scenario, right? Something like this. You have your value gap here that we're trading into, and then you have London session high all the way up here. Then what you can see is, okay, if we put in that low between 9:30 and 10 o'clock, we want to see the high put in at 10:30. And then say you have a value gap here that lines up with the breaker. And then we drop into it at 9:54. That is like the best, that is the juiciest kind of entry you can get on the macro for sure. And then you're literally just holding it up until the new high that's expected to be put in between 10:30 and 11 o'clock. And that's one of the best entries you can get all morning session is just by using that kind of framework. Does this happen often? No, unfortunately. It did happen a lot in April. April, we were killing it for 2 weeks, 3 weeks straight. But this summer price action is just kind of a mess. Hey, I'm delayed on TradingView about around 10 minutes. You got to subscribe to the live data. If you have the little D up here, it says delayed, then you have to probably get the live data, which is kind of annoying. We're starting to get a bounce on in this. But I'm not going to keep you guys too long today. I'll make sure to, I'm going to send the screenshot, the write-up for today as well, later in the day. I'll post a stream from recording as well. Are we expecting another run on the lows or a potential reversal? You could see it. The only reason I would say that this is fine is because we're trading into a daily imbalance. So it may take a while for us to run back into this. But yeah, it is 10:12. So just like yesterday, that's the wrong time, I guess. But there's just a lot of stuff that is messed up today where it's like, okay, you can't really require precision in both the time and price aspect. Anyways, hopefully tomorrow's better. Tomorrow we have 8:30 news, and then Friday we have no news. So Thursday, Friday, we've already got a pretty clear market on the 1 hour. We have the week's worth cut out for us if you look to Monday really quickly. We already got our 4-hour change of state delivery. And you could see a potential weekly expansion down into maybe these pulls down here. But we'll see going into tomorrow. So do the work that's necessary that no one's counting on you to do, just yourself. No one's watching, but make sure you journal, screenshot, the normal stuff. Tomorrow, same kind of time. Let's try and start right around 9:30. Hopefully get some quality 60 point, 70 point entries to wrap up the week. If you got any questions, shoot me a DM. And I will see you guys tomorrow, Lord willing. Peace.